Good afternoon. Today is Tuesday, the 1st of April, 2008. This is Brian Shannon from AlphaTrends.net. And the market's closed. We had a very impressive session for the bulls today. The market did break this downtrend line that's been intact since late last year and also got back above that 50-day moving average on a convincing close above it today. And you can see that the prior levels of resistance have been taken out. And now this market seems to be in control by the buyers, but it seems to have been in control by the buyers on a lot of other one-day rallies. It doesn't mean that I'm expecting this rally to fail. I think that it might have the legs to continue a little bit higher, and perhaps we could see these prior lows up near 139.5 tested. Bottom line is, though, that the primary trend still does remain lower. That's a fact. But as I've been talking about the last couple of weeks, we've been seeing more signs of this market becoming neutral. And today, obviously, is very encouraging with a 3.6% gain that closed right at the highs of the day. I don't think there was anyone who sold short in here today and is still holding who's in a winning position. You can see that we had the gap higher today, and the market kind of rallied up a little bit and battled with that VWAP and then took off from there. And then it was pretty much higher highs and higher lows all day long as short sellers got crushed in this environment. When we look at the 10-minute time frame, the last few days, last week we were bearish because of this lower highs and lower lows that we've been seeing in here. Yesterday I mentioned that these moving averages were crossing and we had these higher lows, so it looked like the market needed to get above the 132.75 level for any strength to hold. I thought that maybe we had a chance of testing the 5-day moving average before further consolidation, but the market gapped up above that level and again just continued to crush the short sellers in here today. So we've got a very impressive rally today, and it's becoming more clear that the short sellers are getting nervous in here and they're not willing to fight these trends. Last week we saw that the low volume that the market sold off on was very unconvincing as far as the shorts being able to regain control. And like they say, never sell short a dull market. Here we see the average price that this market has traded at since the January lows is right around where we opened up today at about 133.70 or so. So now we've got a sense of better feeling by the majority of participants in that the average participant since the January lows is in a profitable position. And actually, since the beginning of the year, since we've traded all this volume at lower levels, the average price is actually lower than where we are. The average price this market traded at this year is 134.73, even with the market down 6.5 or so, whatever percent it is down for the year so far. So we've got a market that seems to be trying to turn. You can look again at this past test of the January lows here and say that was the bottom. And, hindsight is perfect. When you're at that position, it's irresponsible to call it the bottom. But now that we're moving away from it and we see that this market is backing and filling and creating solid levels of support underneath it, then that shows that the tone of the market is changing. It doesn't mean run out and buy everything. This strong rally may continue for another couple days, perhaps even up towards this level, and then it will pull back, as all rallies do. They don't just continue straight higher. So don't get impatient if you've been sitting on the sidelines in cash thinking that you have to run out and buy everything at current levels. Let's see, this level should be the important level that holds as support. But now I think that we've even got to look at these prior highs right here as our first potential support level, near about 135.5 or so. 135.5, pull back down towards that level and stabilization. If we could see that, then perhaps we're going to see further upside. You have to be impressed again with the action in here today. And I think that if this market can continue to rally, the next potential targets are likely to be up near this 137.70 level right here that we saw resistance and then support right here in late February, act as resistance before that decline. And if it can pierce above that level, then I think we're going to be looking at these highs near 139.25, which is again, getting close towards these levels here near the 139.5, 140. So the market is making progress, and that's a good thing for the buyers. And if you were long today, I'm going to give you one of these, just as I would give them to the short sellers when they're in control. Because if you're a long trader, you had to be happy today. So let's take a look now at the XLF. XLF was up 7.2% today. Not enough to get it past this downtrend line, but it did close above the 50-day moving average. And again, we're seeing signs that this market is neutralizing in here with the moving averages crossing. We saw the low volume pullback, and this is what you want to see. This big volume in here indicates that the buyers came in, and it wasn't likely just short covering, but some actual long, new long purchases as well, or natural buying as it's called. You know, a natural long is someone who's buying to hold a long position versus a short squeeze or a short covering long who just goes in to neutralize their offsetting position. But here we see that, you know, yesterday I said there's nothing bullish looking. It's still, again, I mean, we're in a primary downtrend. It's really not a bullish picture here on the daily time frame. But when you look at shorter term time frames, you see that we are making some progress. Yesterday I had mentioned $25.30 as if it gets above that level, then we've got, you know, potential for some strength. But it was more likely, the more likely area was right in here, this 26.20, 26.30 level. That was the real key level that I'd said if it can get above that level, then perhaps we can see some further strength materialize from here. I think that maybe another run up and test of this downtrend line, pullback, and then a breakout. We could see these shorts continue to get squeezed pretty good in here. So there is, you know, there are encouraging signs. Right now we want to see 26 to 26.30 hold as support. If this market starts pulling back, that will continue to be a very important level going forward. As for the Russell 2000, again, we had seen this market battling with this $68.50 to $69 level in here. And yesterday we'd seen our first encouraging signs of the higher low. And, you know, it needed, like I said yesterday, to get above that $69.50 level. I said if it can get above $69.50, then the longs can breathe a little bit easier, and there might be some potential for further upside from that point as well. Looking at the daily time frame, we're still, you know, haven't broken the primary downtrend line here. But that is, you know, this is still up near that $73 level, which again is likely to be a very heavily contested area, as that was the major level of support that was broken back in January. We'd seen it act as resistance. So perhaps we're headed up towards that $72.50, $73 level. The volume wasn't quite as strong in here, but still, you got to be impressed with the 3.6% rally in here today. And you saw that volume increase towards the end of the day, showing a sense of urgency amongst the buyers. And I think that you can look at that as buyers from, you know, who are covering their shorts, as well as, you know, fresh money buys in here. Looking at this 5-minute chart, you can see just a great pattern of higher highs and higher lows in here today, and fighting this uptrend in here today. You know, the initial people who like to fake gaps had an okay time for about 8-10 minutes in there, but then they just continue to squeeze them all day long. So it looks like the IWM as well is making some solid progress in here. And perhaps we've seen the lows for a while. This level here, right near the 50-day moving average again, right at about 69. That's the average price that this market's traded at since the January lows. Since January 1st, we took that out on the open right here, and now solidly above there. That puts people in a lot better mood as far as anyone who's bought this year, on average, is now making money. Regardless of what the percentage down for the year may be, the average person, based on the volume, is, you know, based on the volume traded at any given price, volume weighted average price, and that's what this, you know, line that I drew across does, is average out the price. It tells us that the average participant is making money. So now we want to look at this level. 69.50, I think, is going to be our key level of support going forward. But I think that even, you know, this $70 level should provide some support here over the next few sessions. So again, it's a very impressive session for this market. The Qs, we can take a look at this longer term downtrend line, and you know, that's still quite a distance away, up near that 200-day moving average in 48. But in here, you know, this market, as I've been saying, has been holding up the best. I said yesterday that we have to have an open mind, and perhaps that this pullback that was holding impressively above the prior resistance at 43 and a half, right in here, that 43 and a half resistance became support and held up the best of these markets, so that, perhaps it's going to lead to the next leg higher. You have to be open-minded to that, in particular if it moved above $44 a share. And obviously, it did that right on the open. Then it took that $44.50 level out as well and just continued to squeeze those shorts higher in here. So, when you get these big gaps higher, what you'll notice is a lot of times they do continue to follow through. And you want to look at the pattern of higher highs and higher lows. And anyone who sold short in here today, there really was no reason, with a strongly advancing daily VWAP, and more importantly, these higher highs and higher lows that persisted almost all day. You could say, well, it made a lower low there, but it certainly wasn't a reason to sell short with such a strongly advancing average price in here. So the cues, when we look at this market, we've got potential for support, and this isn't going to be relevant certainly tomorrow, I wouldn't think, near 44 and a half, and then 45 as well. When we look at the hourly time frame, you can see going back, we've got a potential for resistance. We've had some supply released to this market on a couple occasions near the $46 level late in January. So the market's running up towards that level, but we're seeing a constructive pattern develop here. We had this resistance again taken out. That held as support. That was the key level of support that we had been watching. So that held. This rally continues to materialize. And right now, let's see if this market runs up towards that 140, not 140, but that 46 level. And overall, again, you've got to be impressed. Don't look at that $46 level as resistance. It's a potential level where there might be supply released to the market that would act as resistance. It could be the equal opposite force that neutralizes this short-term trend. But wait before, if you're looking at this thing saying, I want to sell it short, wait until it gets up there. And this rally right here is similar to this. Wait for it to distribute and then make that pattern of lower highs and lower lows. Then you want to be in a position where you want to consider the short side. But it's clearly not the time to be a short seller.